Share Shootout brought to you by Lion of Africa Insurance, insuring South Africa's future.
Watching Share Shootout here on CNBC Africa First with Business Worldwide. You're watching Share Shootout. It's a fantastic battle this evening of the wits as we go into the final round. And before the break, we had Haworth and Witten. Mike and Mark just sound too close together. Both of us gave us two share picks. Mark Witten, Anglo-American, and Kumba Iron Ore. Both have been blasted into obscurity. Mike Haworth from Applied Capital Insights gave us Sasfin and MPact. And of course, the first one, Sasfin, was rejected. MPact, however, was cautiously accepted by Mark Witten. Mark Witten, you get to go first this time round. Last week you did something which hadn't been done yet on the show, and that was give us a short. You giving us another short this week? 30 seconds on. Your short of Exxaro Resources starts now.
Okay, so first of all, Exxaro's main source of revenue is Kumba, and if people expect Kumba to be, so much less profitable going forward in terms of the iron ore price, etc., Exxaro should be following suit, which it hasn't. Secondly, the pigment market, as we can see, the prices of pigment, which is a big part of Kumba's business, are under huge pressure. Thirdly, the acquisition they did, which is to start mining iron ore in the Congo. I mean, they bought an Australian business mining iron ore in the Congo. It's just kind of like, finding a unicorn in the Congo to me. It's not going to happen. So the last thing that bothers me is that they have this huge expansion of almost a third of their market cap, over 10 billion at Whitfield, and yet they can't give me any kind of visibility of ROE or what the project's expecting.
Your 30 seconds are up. But just to stress once again, this is a short. Exxaro, which is on a multiple of 10 times, a market cap of 54 billion. You think that market cap is wildly over-exaggerated, and you would like to see that share price come back a little bit. As you don't like Kumba Iron Ore, as Exxaro is heavily dependent on Kumba Iron Ore for its earnings, this plays beautifully into your hands. You have to accept it, don't you?
I do accept it.
Okay, explain to me why you agree with the story that Exxaro is massively overpriced.
I agree with certainly the mineral sands kind of products. I agree with that. I think Tronox is not coming right at the speed that I think a lot of investors expected. The coal mining business obviously is under price pressure, and I think if government gets its way, particularly on the thermal coal business going into Eskom, they're going to manipulate these prices and they're going to manipulate them down. So that's actually a further constraint. And to me, the other complication, or it's quite a stretch to go off into the DRC. They haven't got the license yet. They've got to go into the DRC and start mining, and they've still got to get it out. Now,
finding unicorns in the
miles
DRC
away from a port.
Yeah, but finding a unicorn in the DRC is a wonderful illustration of just how hard that task is.
But Mark didn't go far enough. He's still got to get the unicorn to the port.
Yeah, no, absolutely. So you're very happy to accept his short of Exxaro, wildly overpriced. What's a fair price for Exxaro?
I think we take a view as to what Kumba's trading at the moment, considering Kumba's much more defensive. Even if iron ore goes to $90 and the rand's at $8.50, Kumba still has a healthy 40% margin, very cash generative. Whereas Exxaro, on the other hand, from a management point of view, they're going to be spending a lot of money going forward, and they haven't really given us any visibility as to what the returns. They just say it's very good, which is not really good enough for me. So I think a kind of 120 rand, 130, 125 rand is a fair price. If Kumba's trading at the moment where it is at 470, call it, even if Kumba's at 500, Exxaro should no way be more than 150 rand.
Okay, do we concur on that one?
I'm with them on that one.
Right.
I mean, if I got my views about Kumba, and Cision's such a big component of their earnings, I mean, I have to go with that.
There we go. So Exxaro, a short on Exxaro, absolutely crucial that you remember that one. We're not picking this as the big go-go share for the future. We're warning that the share price is too high on this one. Exxaro Resources, the short is accepted. So we'll move on to the final pick of this evening, and I want to look at his face when I say what the share is to see whether or not he's happy he picked MPact. 30 seconds on Super Group. Start now. You relieved? 30 seconds on Super Group.
A recovery stock. It's in the process of recovery. To me, the fleet solutions is by far the biggest part of the business, 60% odd. Got the highest margins, got some long-term contracts, doing quite well. I mean, I think some of the local government stuff has just expired, but they're replacing that. The dealerships is the smallest side of it, and the supply chain is about 30%. So the lion's share of that business is about logistics. Again, because of the decentralization and urbanization, there's massive secular trend in logistics in this country.
Okay, is it the best logistics company in South Africa, the best share to give you the exposure to logistics?
I think. Look, we much more prefer Imperial and even Barlow's to an extent in this space. I actually used to work for the CEO for Peter Mountford at RMB Asset Management many years ago.
So you know the truth.
Well, 15 years ago. So, the reality is that it's a geared business model. So
I'd rather know about your opinion of Peter Mountford, actually, the former chief executive who worked.
Can we keep on the company here,
Absolutely.
I think it's a geared ROE. So at the end of the day, you can see there's no dividend yield in this business. In order for the business to grow, they have to spend a lot of cash, which is always a bit of a worry in that when the cycle turns, which it eventually will, be it on the retail sales, on the motor side, etc. And relying on government projects, relying on government expenditure has always proved a bit risky. So I think those are the two key concerns. I actually think Peter Mountford's a reasonably good manager. And I do think that from a positioning point of view, they've done very well to turn the business around. But going forward, I think there's much better value to be had from the likes of the Imperials, which have earnings in the places like Germany, which as much as Europe's sick, German exports are flying.
Yeah.
So
but you don't have the focus. I mean, Super Group gives you the logistics focus. Barlow World gives you big heavy machinery.
But it's South African logistics focus.
Yeah.
It's not that's the worry is you actually, when you take a look at where the pricing pressure is coming in, we're going to see fuel increases, the roads, there's not going to be any new roads, so the maintenance of the roads is going to get worse, which means the cost of moving goods can only go up as vehicles get more and more damage from wear and tear, etc. I don't think the South African...
Defend that one, because I think that's a very valuable point to make. I mean, you've only got to try and drive from here to the northern Drakensberg to know that there isn't a road anymore between Harrismith and Tendele.
I think the retailers will acknowledge that these costs are going to get passed on, and that's why they've restructured and put DCs in place. They are trying to manage that supply chain cost. That's one of the retailers' big strategic moves to try and manage that cost. I think a lot of this, I mean, if you've got e-tolls, for example, I mean, there will be, I suppose, some equal misery component to this. But again, to me, it's a secular trend in what looks to be a very messy environment domestically. You've got this urbanization, you've got this tremendous need for convenience, you've got the decentralization of retail, massive expansion of logistics requirements. These are unique to our particular, to South African urbanization.
You don't need to convince me, but you need to convince him, and I don't think you have. You should.
No, I mean, any company. Besides, we don't like companies that don't pay dividends. And I said, besides Pick and Pay, which we're happy if they don't pay a dividend. The reality is this kind of business model, like I said, they have to gear themselves to continue growing. It's a very cash intensive model. And when the cycle does turn, these guys tend to get hurt quite aggressively because, you can forego buying a new car, but you're not going to stop eating.
Okay. At this point, we have to wrap it up. And it's this point that I've got to make a really difficult choice. I've got a really hazy view as to where I'm going to go with this one. Because here we've got, with Anglo-American Platinum and Kumba, both going long on those ones and short on Exxaro Resources. Mike Haworth shot down Mark Witten's Anglo-American and Kumba Iron Ore, but accepted the short on Exxaro Resources. Now, this is a guy who has been quite bearish on the Rand in the past. So he doesn't even expect the Rand to come to the rescue of these particular companies. And then Mike Haworth from Applied Capital Insights, a considerably more adventurous suite of shares. Sasfin, quite dull, but in an exciting space, and acknowledged, I think, by Mark Witten for being a solid business in an exciting space, but better value, you said, I think, in Nedbank, for example. MPact, you reluctantly accepted, and I think you're glad you accepted it, because otherwise you would have had to take on Super Group. Now, my difficult choice right now is to who stays and who goes. And in the ancient traditions of what has been Share Shootout so far, the person in the middle has only won ever once. He won last week, but I'm afraid this time he has to be shot down. And so he is gone, Mark Witten, that the view will become clearer into the future. And there we've got our supreme reigning champion, Mike Haworth from Applied Capital Insights, who survives. Because one of the biggest crimes on this show is to be dull. I'm not saying Mark Witten was dull, but he had a strong resources bias. At least what we had from Mike Haworth this evening from Applied Capital Insights was variety, the spice of variety. We like the Sasfin story, we like the MPact story, and unlike the guy who's just departed, we quite like the Super Group story as well. Even though they don't pay a dividend, they may need quite a lot of cash to run their business, but South Africa certainly needs good logistics. That is it from Share Shootout for this evening. Thanks very much for watching. I'm delighted that you joined us. Remember to catch me on Twitter, give me your Share Shootout suggestions and your thoughts on @BruceBusiness on Twitter. Catch us next time on Tuesday, CNBC Africa, as we continue to pick out a winner and shoot down the rest. Good night.